So thank you for this third session. We will move to the fourth session on the impacts of COVID-19 on payment solution with exciting subjects like contactless payments, crypto payments, and payments data localization. So we have Hervé as a moderator, and I will call our three speakers, which are here this afternoon. So Michel Casaca. Michel is a practice director for blockchains and payments innovation at Asana Consulting. He's also in charge of the working group cryptopayments in the France Payments Forum, which is very active, and also member of the Council of France Payments Forum. Thank you, Michel. I'll also call Loïs Moulin. So Loïs is executive vice president at Groupement Carte Bancaire. After extensive experience in cards and payments and an engineering school, he's been working with Carte Bancaire since 1993 and is now EVP in charge of development and including marketing, innovation, and retailers, and also the relationships with the CB Carte Bancaire members. And last but not least, Rémi Steiner, who is general engineer of the French high-level public servant Corps des Mines, and member of the French General Council for Economy, which is an advisory body to the French Ministry of Finance, and also co-author of the public report on implementation of the European policy about critical payments data.
Thank you, sir, to be with us, gentlemen, to be with us this afternoon. We will begin with Loïs. And Loïs could give with us shortly, always shortly, a global picture of what was and what is also now the main impact of COVID-19 on payment by cards.
Yes, there is a lot to say about this topic, but maybe a preliminary observation is that for that reason, the entire French card payment system has demonstrated its resilience. Our payment system is obviously banks, card scheme, but also all of the technical service providers, which were able to support merchants for payment. We have absorbed the peak of payment just before the lockdown. We were able to roll out the new contactless payment limit in less than 5 weeks, and no critical incident has occurred during this period, thanks to the business continuity plan put in place everywhere. But coming back to consumer and merchants, yes, indeed, we have observed interesting evolution behind the economical shock. Both observations, how and where customers have purchased goods and services, and how the mix of payment methods has evolved, especially in physical commerce. First observation, the usage of e-commerce has indeed increased during the lockdown, and that is two main reasons for that. One is the fact that large retailers, which were already omnichannel, were able to very quickly redirect their customer from physical shop to online. So it's not only the retailer where shop were closed, but also supermarket, hypermarket, etc. And Drive, for instance, has been very important and has seen a very good increase. But beside these large retailers, we also have seen numerous of small and independent shops, which were only brick and mortar before the COVID, and in less than 1 month, thanks to banks, thanks to technical service provider, they were able to become digital. So to set up a website, set up payment page, for them it was a pure question of survival. And it was spectacular for restaurants. Before the lockdown, nobody can imagine that restaurants were moved to online. They have moved to online. It was less spectacular, but very noticeable for bookshop, for pharmacy, and we have seen a lot of interest. And as a result, surprisingly, mid-April, online CB payments were above the figures of 2019 for the same period. But in physical shops, we also have seen that, fortunately, customers have continued to visit physical shops, and they have favored what I call proximity, local shops. So they have gone to the shops around the corner in order to remember to the most oldest of you the Ernst Lubitsch movie. So, and it was also a very visible trend. And the last observation about the mix of payment, yes, cards have gained during that period. It's not a new trend. So cards represent today, in 2019, 60% of the value of daily expenses of French cardholder. We haven't the figure yet for 2020, but few retailers have observed that, have monitored this evolution, and they have observed that cash has been reduced by a third in number of transactions during that period. And I won't be surprised if next year, we'll see that card in France will represent 65 or even 75% of daily expenses. And obviously, contactless has been instrumental to that.
So I will go. What could be, just on this point, contactless payment, what could be the next step, not only on volume, but also technical services for people, etc.?
So today, before the lockdown, contactless represented 36% of proximity payment. Today, with this new limit, 50 euros, it represents more than 1 in 2 payments in shops in September. And there is a potential for 80%, because 80% of the card payments are below 50 euros in France. So there is obviously a large potential for organic growth. But beyond, what are the potential for additional growth, and how to cover not only 80%, but 100% of the spectrum? First, toll motorways, because they are deploying contactless, and at the end of 2020, almost all of the toll motorway will be contactless compatible. Second, public transport and transit with open payment or simply contactless payment at the gate. We have more than 20 projects in France. 10 are already live, especially in regional big cities or small ones, but even close to Paris, because Roissy and Orlybus are now contactless, for instance. And the third is mobile, because mobile contactless payment will have a significant, has had a very significant growth between 2018 and 2019, thanks to the progress made by Paylib and Apple Pay. So it still represents maybe less than 1% of total payment in France, but will 4 digits or 3-digit growth. Next year, it will be more than between 1 and 2%, so not anymore marginal.
Thank you, Loris, on this point. Now we are going to another topics. It will be crypto asset, crypto payment, cryptocurrency. Michel, same question. We have understand that COVID-19 has given a strong pulse on development of crypto asset. Could you give us a state of situation up to date of the evolution of the crypto asset market from from the beginning of this year?
Thank you, Hervé. Well, as Madame Lagarde said this morning, the topic is high on the agenda, digital euro and crypto assets in general. And maybe almost every speaker today at least mentioned the interest and questioned maybe also the interest of this topic. So this year, France Payments Forum have also dedicated a work group, we called it Crypto Payments, to follow maybe the transition of the value chain of payments, the legacy value chain of payments towards maybe a crypto payments value chain. In every aspect of the value chain, from the issuing of the means of payment to the conservation of the crypto asset to the payment part, acceptance part, etc. Well, to sum it up with one figure, this year to date, it marked a plus 70% growth in the market cap of crypto assets and crypto payments, cryptocurrencies in general, rocketing from $200 billion in the beginning of the year to a staggering $340 billion today almost. So this just gives you an aspect of how much digital crypto things, payments, grown, maybe also caused by the COVID crisis. So in France, the ecosystem, and in Europe in general, was under very, very high tension this year. The tension, as also Jacques said, from the competition from Asian and American. So on the other part of the Atlantic, we have high funds, GAFA, providing we're capable with very high funds, and the other side in China, structural support for crypto assets and crypto payments experimentations. For example, I will not talk about Libra, almost everyone has heard of it, but we also have noted the approach between Visa and Coinbase, or PayPal and Bitfinex, in addition to maybe other under-the-hood projects with big techs. On the other side, in China, there's a structural support. The E1 has been, they've been working on the central bank digital currency, the CBDC E1, since 2014. So they are somewhat in advance on this topic. And they are on a stage today to integrate it with wallets like WeChat, Alipay, and last week, JD.com. And we are not talking about just big payment actors. We are talking about actors that are, all of them, more than 40 times bigger than Apple Pay worldwide, just in volumes. So it's important. That's why the subject is high on the agenda, one of the reasons. So if I continue, just to give you what was the impact this year, the French association ADAN, that works on the crypto assets ecosystem in France, have made a survey. In the survey, we noted that this year, because of the crisis, the first impact was on the financing. And then the second impact was on the project themselves. The number of the projects dropped by 60%. This is mainly in the business to government and business to business industry. But on the other side, as Louise was also saying, from the merchant part, from the B2C part, there's a growth. So what maybe was lost on the B2B, B2G part, maybe was gained almost the same rate, 60% plus projects and financing on the retail B2C part. So this is maybe also due to the government help, but this help is not the panacea. What we need in this industry actually is an industrializing industry, as we say in France Payment Forum. What we need is an impulse. What we need is more than just aid to these fintechs. We need a structure that will allow them to build above it something that is useful to test these use cases. And finally, there was one last learned lesson this year from the acceptance of cryptocurrencies in certain retailers worldwide. This study demonstrated that on the acceptance part, where I can pay with cryptos, there was a more high growth in the new customers, maybe new category of customers, and finally the reduce of fraud, paradoxically, on these kinds of payments.
Thank you, Michel. Now, you have read, like me, the report of the high-level task force of the Euro system about the central bank digital currency and digital euro. And what is, in your analysis, the main line of this report, and what are your main recommendations?
Okay, we all at the crypto payments ecosystem welcomed this report. And it was a long-awaited one. We've read like reports from almost 70 central banks worldwide, and we were looking forward to read this one from the ECB. And we see the high importance and priority they put on this subject, although with some questioning about the business case. So it's very important that we adhere to the idea of payment sovereignty. We are revolutionizing the legacy payment systems. I'm talking about our flagship, SEPA, instant payment. Request to pay is a very, very important part to bring value to these new infrastructure. So we need to push this forward and accelerate for it, but we do not need also to wait more on crypto payments advance. Because here we are talking about programmable money with new use cases that we need to experiment, to test, and to see the value. And these are not just vanishing wishful thinking. It is extremely essential to do it. Because although the business case is not demonstrated today for banks, and I agree totally with that, well, this can change very quickly when the yuan will be. I mean, these are global stable coins by concept. By design, they are global. So me, you, everyone can adhere to them and use them. And the threat will not be being late on a card scheme, having international card schemes being used here in Europe and many years later trying to solve that. And we see already the impact. Here, the impact will be higher. We are not talking about a means of payment. We're talking about money itself. We're talking about the impact and the efficiency of monetary policies. And we are talking about also on the trust of this money we are talking about. So that's why it's very essential to not only be the worldwide leader in regulating the crypto assets, which we are. We are having great projects of regulating crypto assets. We might be even the worldwide leader. We do not want to lack to do the race. So we have to do the race, and maybe to reiterate the successes we had maybe with European projects like Airbus and SEPA.
Thank you. Thank you, Michel. Now we go with Remy on the third issue. The third issue is localization of payment data. Remy, you take part in an official report on matter related to sovereignty issues in payments. What can you tell us about that?
Yes, now with something completely different. Thank you very much for this opportunity to share the outcome of a study by Conseil Général de l'Économie, which I will not repeat, is part of the French Ministry of Finance, and intended to provide the Minister's Office with advice on public policy and decision-making issues. As you certainly know, in February 2019, le Comité National des Paiements Scripturaux, the French National Committee for Cashless Payments, endorsed a new roadmap for the years 2019-2024. The document identified as a key issue the independence of the European market in the area of payments, and it suggested that data relating to transactions denominated in euro currency should be processed within the borders of the European Union. And therefore, in June 2019, Conseil Général de l'Économie was mandated to investigate the feasibility of an obligation to locate retail payment data on the European territory. And it was required to assess the importance and the sensitivity of extra-European processing of critical payment data, as well as all the sovereignty issues associated with such processing. So Sandrine Lemery and myself were commissioned to carry out this mission. Sandrine is now a professor and researcher with CNAM, Conservatoire National des Arts et Métiers, and she could not attend today's event. But during the second half of 2019, we both interviewed a large number of players involved in the French retail payment industry, public bodies, professional organizations, numerous banks and payments institutions, commercial companies, service providers specializing in the field of payment, and we tried to figure out the issues at stake. Our final report was made public. It is available on the Conseil Général de l'Économie website and on www.v-public.fr. The recommendations we made are intended to feed into the work of the National Committee for Cashless Payments and also to contribute to the European Commission on its strategy on retail payment. So the core issue that we had to deal with was the degree of acceptance and the feasibility of a payment data localization obligation. And although non-European companies are playing an increasing role in payment services, the prospect of enforcing a data localization obligation appeared to us to be fairly widely supported in France by many of the people we met, provided that the obligation would apply at the scale of the European Union, and of course not on a national level. And much to our surprise, only a very small number of international players have raised objections to it, and these objections did not appear to us insuperable. What would this obligation consist in? The mission considers that if adopted, it should cover all data related to payment transaction as soon as two conditions are met. Firstly, the transaction takes place between two parties located in Europe, and secondly, these data are personal data within the meaning of GDPR. And in other words, both the payer and the payee must be located in Europe, and either the payer or the payee is a natural person. As we envisioned it, the data localization obligation would imply, on the one hand, that payment data should be stored on European territory, and on the other hand, that these payment data could not be copied outside European borders. While our study led us to support the principle of payment data localization, it also made us believe that this obligation alone would not be an effective defense against all the threats that could affect payment systems or data. And therefore, we examined other avenues for strengthening European sovereignty in the area of payments and recommended alternative or additional measures in different fields. These avenues relate to the rules that should apply when a co-badged card is dematerialized on a smartphone. It relates to the substitution of sensitive payment data by secure tokens or payment tokens. It relates to GDPR enforcement in the specific area of payment, or to data storage and processing on public cloud infrastructures. Of course, we were aware and we were very interested by the EPI initiative, which was in the early phase. This initiative proceeds from the same concerns as ours, and we very much hope for the success of this initiative. Well, it would certainly take too much time to discuss in more details all those issues, these various topics. I would encourage whoever is interested to read our report, and I would be happy to engage for going for discussing further this short resume of our work.
Thank you, Remy. Just one question more. Your report is written at the beginning of this year. What happened from the beginning of this year on this subject? And what do you do of this report? How all that is evolving? What is the situation up to now?
Well, first of all, I must restate that this report was not meant to be, the recommendations were not meant to be implemented in national law. They were designed at helping the European Commission. And this report was sent by the French Direction Générale du Trésor to the European Commission. It is now in their hands. And hopefully our recommendations will be taken into account in the European retail payment strategy or its next steps. As you know, the European Commission launched in April 2020 a public consultation, and we've mentioned it earlier this afternoon. And the French National Committee for Cashless Payments contributed to the consultation. It explicitly encouraged the European Commission to identify measures enabling to address the threat of intrusive foreign regulations on its data privacy, including potentially a data location policy. And the summary of the contributions received by the Commission if not the strategy itself, echoes concerns about the dependency of EU acquirers and issuers on non-EU global players and the processing of consumer data outside of the EU. There's been obviously many changes since we wrote our report, and they've been commented this afternoon. International cooperation is very much in disarray, as was highlighted by the management of the COVID crisis. Sovereignty issues have grown, and I would think that our recommendations tend to be all the more relevant today. I would like to emphasize one particular issue, the one of cross-border transfer of personal data. GDPR rules provide that a transfer of personal data to a third country may take place without any further formalities where the Commission has decided that this third country ensures an adequate level of protection. And such was the case with the US. A decision by the European Commission recognized in July 2016 that the so-called EU-US Privacy Shield provided an adequate level of protection for the transfer of personal data across the Atlantic Ocean. This decision was very convenient for both American and European companies. They allowed for cross-border data exchange to grow steadily, and these companies were entitled to assume that personal data were safe and sound in the US. Yet from the beginning, the Privacy Shield was decried as showing little improvement over its predecessor, the safe harbor privacy principles, which were struck down in 2015 by the European Court of Justice. And the Privacy Shield provisions on data protection were so poorly and so reluctantly implemented by the US authorities that one could see them mainly as a smokescreen. This was so true that in July 2020, a few weeks ago, the European Court of Justice invalidated the Privacy Shield. This was not, as I suggested, a thunderclap in the cloudless sky, but this was a game changer. It means that from then on, compliance with GDPR could no longer be taken for granted when personal data are processed in the United States. GDPR allows for other and more arduous ways, such as binding corporate rules or others, to ensure that data transfers do not breach data protection principles and offer appropriate safeguards. In any case, a data controller should no longer today proceed with data transfers and data processing in the US or elsewhere unless he takes careful steps to ensure GDPR compliance. Obviously, not all companies commit to the highest level of personal data protection, no matter whether you consider large or small companies, high or low tech, big five or not. At the risk of being fined or undue name and shame, a service provider must be very much aware now of who they partner with, where the personal data they collect are stored and processed, and what services they outsource and to whom. Even if there is many a way to transfer personal data across the world within a sound legal framework, the commitment to process European nationals' personal data on European territory is surely today less of a headache for a company and a fine option to consider to ensure compliance with data protection rule.
Thank you, Rémi, thank you, sir. We have 3 minutes more because we are waiting Mrs. Mayatik. She's there. Okay, thank you very much, sir. So, merci beaucoup. I am not in her, and we could, thank you.